hawataweza kukupenda, hawataweza.
Mbona do you have to be this way? Unajitoa from all the promises we made. You wanna blow up all the loving that we gave, listening to
he said and the she said. Uongo za mjini zimeoga. Niamini na kupenda
ni wewe tu. Wakusema watasema,
usiku watalala. Na wakisema ni mapema. Kupenda tunavyopendana, tutaishi kama Romeo na Julia kwa sinema.
baby achana na wasikie hao baby achana na usiwasikize hao
The city's full of haters, full of players. All they wanna break us.
1 2 and 2 and 2.
Oh baby, achana now. Cause when we say ni forever, ni vow tunaweka. Mimi na wewe tu. Let us go down in history. Niamini na kupenda ni wewe tu. Wakusema watasema, usiku watalala. Hawataweza kukupenda vile ninavyokupenda. Amini hata dunia itashindwa na cha kusema. Na wakisema ni mapema. Kupenda tunavyopendana, tutaishi kama Romeo na Julia kwa sinema. Baby achana na usiwasikize hao.
Un petit café rentre là-dedans. Pas pour dire tu fais en plus parce que créole il aime là-dedans.
À le cassement, les vins, à le cassement, pour rouler les vins. Allô?
Danse, tu danse, danse, tu danse, tu me fais danser, danse, tu me fais danser. Comment il gagne pas, il gagne pas, il gagne pas. La maman, parle pour faire trop. Si tu t'as qui nous t'aimes, la réunion est un cadeau. Azodi, ton anniversaire, Azodi, ton anniversaire, Azodi, quelle qualité, la donne à tout. Le cassement, pour rouler les reins. Allô? Danse, danse, tu me fais danser. nute mana genyo idankado Azoti to l'anniversaire Azoti to l'anniversaire Azoti kekali keka dona dona Le gasman 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 les mains à la le gasman 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 pour vous les mains alors danse 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 tu me fais danser danse tu me fais danser comment égal pas I'm going to let you on the
Ladies and gentlemen, let's give a proper round of applause to Sarakasi dancers. Like seriously. Thank you. Thank you. Excellent. Shall we be upstanding for the Kenya National Anthem and the East African Anthem?
House. Who are these people waving Ethiopian flags in the front?
All right. Do we have Wasuze Otia? Yes.
There you go, there you go.
Yes.
Do you know, I think, especially because of the conversation that's been going on the last few weeks, if you're a Ugandan, you need two flags. The Kenyan one and the Ugandan one. Do you agree? Let's give another round of applause to the Ugandans in the house.
All right. Let's see. Who else is in the room? Mwaramutse. Gosh, you came alone.
There you go.
There's nobody else? There are no flights? Welcome, Rwanda.
Welcome, Rwanda.
Okay. Sawubona.
Sawubona.
Ah, fantastic.
Let's give a warm round of applause to our team from South Africa.
Great. Tyrion, what do we have? Akwaba. There you are. There you are. Finally, we got to you. Full flight. How far? We see you, my brothers.
Big round of applause to Nigeria. Bombia? No. Angola? Mozambique? All right.
They missed their flights, all of them.
No, that's one of the things that we have to discuss. They have to leave the continent to come back into the continent.
Let's try and see if we made it. Sabalher,
Egypt.
Fantastic. Excellent.
Bonjour. Anyone from French West Africa? Which give a warm round of applause.
Okay.
I think there's one we've missed, and I see the flag somewhere here.
Like, which one?
Good morning. No, that's Swiss. What is that, Swiss? That's UK. Good morning.
Do we have Malawi in the house? Okay. Who else is in the house that we didn't mention?
UAE.
The UAE. Okay.
A big round of applause.
There's a little East African country that we haven't mentioned. Kenya, yes. Okay. Also, ndugu zetu Tanzania, hamjambo? Habari za asubuhi. Okay.
We have Jordan. How do you say good morning? Sabah al-khair. All right, a big round of applause to Jordan. Which other country have we missed? Oh my goodness, how could we? Zimbabwe!
Somalia? Yes, we've got Somalia.
How do we say good morning in Somali?
I am sure we can't say that. We have another country called Africa. Where are people from Africa?
Africa?
Okay. It is a country-ish. Great. Ladies and gentlemen, good morning and welcome. We're so glad you could be here. My name is Boni Tunya. I'll be one of your MCs this day.
And my name is Terry Anchibed. Absolutely excited to be here this morning. Welcome once again to the Africa Investment Conference 2025.
This conference, Darian, comes at such a timely point because there's a lot of conversation about how do we move forward. And globally, every person is being nationalistic, it started with America first, now it's Kenya first, Tanzania first, Uganda first, everything first. And so a lot of African jurisdictions are struggling with how do we move forward. Obviously, if you look at the past year, lots of excitement in the investment space in Africa generally, and I read different authors have described it as dynamic, diverse, and so we're coming at an interesting point where there's a lot of conversation of exactly how do we move forward in the midst of all the challenges that we face. And this next 2 days, we're trying to figure out how do we do that in an African way.
Absolutely. And you know what I'm just thinking, as a continent, we are the continent that invests least in the continent. 90% of the time we're relying on data that's done outside the continent, but right here in the room today we've got global investors, we've got professionals from finance, we've got the people who make decisions on investing. And Bonnie, you spoke about how the world has gone Kenya first, America first, ETC first. But as a continent, that does give us an opportunity. We've got the AfCFTA, which hopefully doesn't become another talk shop. As East Africa community, we have great experience with being a talk shop. But we do hope that in this room, we can all move the needle slightly towards making Africa a continent that can trade easier with each other.
Right, and Terry, at this point, I'd also like to acknowledge the wonderful thought that brought this, that convened this. So I'd like to recognize first CFA East Africa, and thank you so much for putting this conversation together. But I'd also like to recognize all the presidents that are present. So we have our very own host from Kenya, Francis. If you could just wave to the people. We have the president of the CFA Society Nigeria, Razak Ahmed, with us. From Ghana, we have the president of the CFA Society, Jojo Carter Banama. Okay. And from Egypt, Ashraf El Khatib. Thank you. From South Africa, we have Tato Mashigo. And we have also Chandradev Sanju, who is the president of the CFA Society for Mauritius. Thank you so much for the teams that you lead and for just putting this space here, because this really truly lives and is anchored on the thinking of the CFA, which is really to create that space where thinkers in the investment space can get together and try to figure what's next for the continent.
Absolutely. I'd also like to recognize the presence of our chief guest, Abubakar Hassan Abubakar, the Principal Secretary, State Department for Investment Promotion. Let's give him a warm round of applause. Karibu sana Bwana PS. Boni, I'm also finding something quite interesting. In Kenya, in Africa, the big boss usually sits at the front. But when you're speaking about CFA Society president, I'm like, where is he? He's like at the back. So you CFA people are really amazing.
I wanted to ask what's up with that, but then, hey, this is different. It's CFA, right?
This is different. A warm round of applause
Presidency to the people.
to all the society presidents that are here with us this morning.
Great. So ladies and gentlemen, obviously the next day and a half will be rich in conversation. We'll spend a lot of time drawing the context in which we operate. We will also identify the key opportunities that do exist. We shall put our minds together in different exciting panel conversations that will try to, help us forge solutions to some of the challenges that we do face. But more importantly, I think the whole point is to share ideas, to collaborate, to speak to each other, and try to figure this out. You will be treated to excellent conversations, and my invitation to you is that you'd be part of this, you'd engage in this, and that hopefully we'll be able to move the needle.
Thank you, Bonnie, and that kicks us off this morning with our first speaker who will tell us why we're here, give us a formal welcome to our event. I would like to welcome up on stage Ruth Amoni, Regional Executive Officer, CFA Society, East Africa. Let's give her a warm round of applause as she comes to join us on stage.
Come when you guys had breakfast. She's the host. Let's give a proper round of applause. Thank you.
Thank you very much, everyone. Thank you so much, Terian and Bonnie, chief guest, honorable guests, partners, speakers, CFA Institute team, our sister society leadership. You're all very welcome. It's my utmost honor to welcome all of you here today. My name is Ruth Hamungin. I'm the Regional Society Executive Officer, and it's my great honor to see all of you here today. Thank you for honoring our invitation to come to the Africa Investment Conference. On behalf of the CFA Society East Africa and the entire board, I would like to welcome you all and good morning. It's truly an honor today to see a great audience here representing different countries and different professionals. We are so honored here to have leaders, professionals, policymakers, innovators, investors, all here demonstrating a united effort and a shared commitment in strengthening Africa's financial market and unlocking the continent's full potential. The Africa Investment Conference is more than a conference. Today, it's a platform where we will be having meaningful conversations, share ideas that will transform the next actions. Partnerships will be forged here in the next 2 days, and a community that is purposeful in growing Africa's financial potential is going to be happening in the next 2 days. This is also a reminder that the conversations that shape Africa's investment landscape is not just made in the boardroom, but it happens in spaces like this and in conversations that are beyond the boardroom. Please allow me to recognize the efforts and the hard work of the teams that have been behind today. First and foremost, I call her the face of AfIC. Grace, if you're in the room, please just wave. I know you've interacted with her. Thank you so much to the CFA Society East Africa team for the hard work, the commitment, the sleepless nights, and the meticulous planning that has gone in. Our sister societies, the CFA Institute, thank you so much for not just the resources that you've put in, but the time you have extended to making this day possible. I would also like to recognize our partners, our collaborators and sponsors here today, but especially I would like to, in a special way, appreciate the CFA Institute leadership. Thank you so much for trusting us with this big event. Thank you so much in believing in the value of this congregation. Your contribution goes beyond just the funding. Your presence here today has demonstrated the commitment that you have in growing Africa's economic ecosystem. I'm also very grateful to all our partners and sponsors that have contributed. Your contribution goes beyond the financial support, and we are very grateful. Thank you so much for standing with us. Our sister societies that have already been listed, your collaboration really speaks to the spirit of the African unity that we share. I would also want to recognize our speakers, moderators, panelists that have traveled far and wide to be here today. Your insights are going to shape conversations today, and we're very grateful that you put time aside to come and share with us. And not least, I would like to recognize you, our special delegates. Thank you so much for showing up today. Thank you for filling up the room. You have made us really proud. Thank you for honoring our invitation. As we begin today, I would like to encourage you to interact, share, take a lot of ideas that you will go back home and be proud to share that you have taken from today's conversations. Once again, I would like to thank you so much and welcome you all to AfIC 2025. Have a great day.
Thank you, Ruth. Let's appreciate her one more time for setting the stage and, of course, recognizing the names that have made AfIC 2025 possible. All right, we'll quickly move on to our next speaker this morning. Let's put our hands together for Francis Nasiomba, CFA. Francis is the CFA Society East Africa President, Kenya. Let's give him a warm round of applause as he makes his way to the stage.
Good morning, everyone. Hello, good morning. I'd like another clap. Thank you very much, and I'll just jump into it. Abubakar Hassan, the Principal Secretary, State Department for Investment Promotion, Ministry of Investment, Trade and Industry in Kenya. Marshall Bailey, the Chairman of the Board of Governors, CFA Institute. Banji Feintola, the Executive Board Member and Head of Financial Services at Africa Finance Corporation, and also a board member at the CFA Institute Board of Governors. The CFA Society East Africa Board, the CFA Society East Africa CEO, leaders of the different CFA societies across Africa, colleagues from the Institute, distinguished guests, partners, friends, and fellow visionaries, ladies and gentlemen. Good morning and welcome to Nairobi. This is the city in the sun and is the financial heart of East Africa. So karibuni sana. You feel welcome? Thank you. I'll force it out of you. So when I was young, we were told not to get angry. We were told to obey. We were told to keep quiet and to listen. We're told to fold ourselves into the expectations of others. But for the next day and a half, I ask you to do the opposite. Now, this is cheeky, I know, and my mother will never approve of it. But I need you to get angry. Not the anger that destroys, no. Not the anger on the government, no. Not the anger on your neighbor, no, not that one. Neither do I want you to be angry to the world, no. I want you to be angry within yourself, because only then will you hear what Africa is saying to you. I need you to get angry enough to listen deeply during the conference, to every conversation, every statistic that will be thrown around, every challenge that will be given, to every idea that will be shared, and every opportunity that is begging for you to rise. To everything that is going to be mentioned in this conference. And yes, I need you to be angry enough to act. For as the Swahili saying goes, gumzo jingi, uongo mwingi. For those who do not understand Swahili, it loosely translates to actions speak louder than words. So today I ask you to listen and engage with intent to act. This should not just be any other talk show. I'm sure you've gone to enough conferences, and this should not be another session to have good food, a nice dance, and another moment to network. Ask not Africa will do for you. I could stand here and give and talk about all the opportunities that Africa has. Our minerals contributing more than 30% of the global reserves across key metals, 60% of the youthful population, 65% of the wild and cultivated arable land, the depth of entrepreneurial spirit, the hunger, the resilience. But there's nothing new I'll be telling you. You are analysts after all, so you know far much more than I do when I talk about these statistics. So let me move to the part that we often avoid, or talk, but don't normally action it. If I start talking about challenges, then the day will not be enough, but allow me to just mention a bit of them. Trade, we are struggling. Inter-African trade is at 16% of total trade. Europe, 68%. Inter-country movement, someone mentioned about some countries not being here. 17 countries, African countries, are the only ones which allow visa-free travel to other Africans. Policies that suffocate potential. We lose 4% of African GDP to regulatory bottlenecks. Africa's infrastructure has a $100 billion annual financing gap, and 70% of Africans' minerals are exported unprocessed. Crops, we all know the story of cocoa. While we only generate 10% of that revenue, we actually produce 70% of the cocoa. Capital that does not move. Pensions have $700 billion, and only 12% is invested in inter-African trade. I will not go into transport, where logistics costs are 2 to 3 times the average global levels. So Africa needs to cruise. And I know you've heard about Africa Rising. How many of us have heard about Africa Rising? I'm just hearing mamas. In Kenya, there's something called, like you just mama and you don't say. But anyway, we keep hearing about Africa Rising. My argument is we cannot keep rising forever. At some point, we have to soar, right? The beauty is, all is not gloom. There are real examples, clear, of Africa investing in Africa. Dangote, expanding cement capacity in Ethiopia and Tanzania, more than $2 billion invested. KCB Group, investing in a fintech in Africa. And I'm proud that my team at Raising Capital was part of that conversation. NSSF Uganda, investing more than $4.7 billion in assets in infrastructure. In Kenya, we have the almost complete Talanta Sports City, and that is mainly funded by $200 million of mobilized domestic funding. Africa investing in Africa is a key thing. With pensions, sovereign funds from all over Africa, South Africa, Nigeria, Egypt, Ghana, all investing in African markets. Combined, African pensions have a significant potential. There are institutions putting in real money in there. I am particularly proud of the African societies across the continent who have chosen unity over isolation, and that's why we are here. Who have chosen collaboration in addition to sovereignty, not in replacing of it. Who have chosen vision beyond borders. Let me honor them explicitly. The CFA Society East Africa, soon to be led by John Okumu. For those who don't know, this is my last dance. The CFA Society South Africa, led by Tato. The CFA Society Nigeria, led by Razak, Selim Sama. The CFA Society Egypt, led by Ashraf. The CFA Society Mauritius, Sunju. And Ghana, led by Jojo. So if all goes well, then I'll take credit. If something goes wrong, just look at those presidents and talk to them. And every CFA community that has played a role in this. I like quoting Chinua Achebe on this. Maybe it's cliche for those who listen to me. When kinsmen gather under the tree, they do not come because they have nothing to do. They come because something important must be done. And today we gather because something important must be done. From the financial corridor, Cairo's new administrative to Lagos's Victoria Island, to Mauritius' the Ben Cyber City, Accra's Financial District, and Nairobi's Upper Hill, and where you are currently, Westlands, to the streets, ports, hubs, and the capital markets in between. Africa is buzzing. Today, we are going to have more than 500 brains, more than 500 positions of influence, more than 500 powerful voices in a room. Now, just imagine if every single one of us did one thing, just one meaningful thing, to unlock capital, to strengthen markets, to support entrepreneurs, to move policy, to shift investment flows, improve governance, drive transparency, raise human capital, deepen capital markets. Just one thing. That would be 500 action points, pushing the agenda of Africa, investing in Africa. Now, imagine if you did two things over the next 2 years, because the next conference is in 2 years, unless I can find Marshall and convince him otherwise. This conversation will not be possible if it was not for the global partners, to a community that has modeled experts, leaders, and visionaries, the CFA Institute. the same that manages the gold standard of financial education and creates ethical professionals, globally acknowledged and locally impactful for the good of society. To the CF Institute, and particularly Marshall, for your continued support in building human capacity, strengthening professionalism, and helping us shape this Pan-African dialogue, we thank you. The growth in global professionals in Africa, Rwanda's has grown 10 times in CFA charter holders. Can you believe that over the last 3 years? Ethiopia has just joined the East African community. Basilizia, yes, that's a big deal. We now have access to exam centers across all the 5 East African charter countries, Kenya, Uganda, Rwanda, Tanzania, and Ethiopia. And the growth in capacity is actually what will be able to drive economic growth in this country. We acknowledge and we thank you. We are committed to continued growth. To the team that put this together, your labor, your sacrifice, your vision, thank you. Grace, I hope you're proud where you are. To every society that said, I'm not, but as an individual, I will come to build the African ecosystem, we thank you for the African spirit. As I tell my Raising Capital team, no one is coming to save us. Please do not be fooled. It is for us to save ourselves. So today I ask you to listen, to learn, to question, to network, do that one thing that you must do for your industry, for your country, for your business, your portfolio, for your ecosystem. And yes, make sure it also pushes your personal agenda. There is no shame in that. Actually, Africa needs individuals whose success fuels the collective progress. Most importantly, have fun. And that's why the conference is not 2 days, but 1.5 days, so that the next half of the day, you can enjoy yourself. But this is Nairobi, the city in the sun, the only city in the world with a game park within it. Can you believe it? You are in it. Inshallah, we'll meet in 2 years' time, and when you do, I hope we'll be able to say, I did this thing personally. To the conference, let us come out with real action points, commitments, next steps, and I challenge the societies to have a follow-up mechanism, not in another conference. I don't want us to have another conversation in another conference. Let us have clear follow-ups, who's supposed to do it, by when, and we can be able to track what we are doing. For indeed, some of us are passing on the torch. So John, do not mess it up. And may we, as a continent, be able to say, together, we achieved it. Thank you so much. Thank you for listening to me. And I look forward to interacting with you. And I'm very sure that you're going to have a good time and have a lot of fun. I hope some of you danced. Thank you.
Thank you, Francis. I must say, listening to you there, but it is an exciting time to be an African, isn't it? Investing within each other as part of the continent. But still, there's so much happening. Growth in FDI, depending on the numbers that you look at, 2024 up 75%, perhaps one of the highest growths of FDI in our lifetime. And clearly, given some of the transactions that Francis has mentioned, when you look at the infrastructure space, or so much more in the green space, for instance, with what's happening in Kenya, there's so much opportunity. And as I mentioned earlier, the decisions are made by the people in this room. So we are looking forward to what you will be doing for the continent. I'd like to now welcome our next speaker, Oyebanji Feintola, CFA, Executive Board Member and Head Financial Services at the Africa Finance Corporation from the United States. Let's give him a warm round of applause.
Thank you very much. Point of correction, I'm not from the United States. from Africa. So we're going to make Africa great again. Anyway, ladies and gentlemen, distinguished guests, colleagues, friends, good morning and welcome to the Africa Investment Conference 2025 here in Nairobi. I think it's a great honor to stand before you today as a board member of CFA Institute and a representative of Africa Finance Corporation, where I am the executive board member and head of financial services at AfIC. AfIC is also proud to be one of the sponsors for this conference in partnership with the CFA Societies in Africa and the CFA Institute. I am very delighted to see many leaders in the room, investors, policymakers, innovators, as well as, so many of us, charter holders, candidates, who are all united by one purpose. And of course, that purpose is that we all want to mobilize Africa's capital for Africa's development. And I think this theme is not just timely, but is also quite urgent. And I speak to this based on my professional life and what I've done all through my career. So I personally believe that Africa today stands at a historic inflection point. We have the youngest population, and I think you mentioned some of those points earlier on, Francis. We have the fastest urbanizing cities in the world, and we have over $6 trillion of untapped natural capital. So, a lot of time we talk about whether there's capital in Africa, there's significant amount of capital in Africa. We did a research at AfC that shows Africa has at least $4 trillion of domestic institutional capital. So it's not a capital problem. Yet at the same time, we need to admit that the continent is facing significant infrastructure financing gap. Again, our research shows that we need to invest up to $150 billion annually in order to bridge the infrastructure gap. We're facing increasing pressure to industrialize sustainably and competitively. We are facing pressure to boost intra-African trade, and I think Francis made a point on that. Intra-African trade is barely 16% compared to Europe and Asia. And more importantly, we need to provide jobs and hope for the young African population. So the question before us, in my mind, is simple. How do we convert Africa's immense potentials into investable opportunities funded mainly by Africa itself? So that is the question that the CFA Institute has been preparing investment professionals to answer. And it is the question that AfC engages with every single day as we try to build infrastructure that will support Africa's economic transformation. I believe that no country in the world industrializes without a vibrant domestic capital market. This is the case in China, is the case in India, is the case all over Europe, the US, Asia, and Africa cannot be an exception. The CFA Institute itself occupies a unique position in this journey. Of course, as we all know, most of us here, through our association, sets the global benchmark for ethics, professionalism, and technical excellence in investment management. And all these equip all of us with the right analytical tools to make better investment decisions, the integrity to make trusted decisions, and the courage to make long-term decisions in markets that often prioritize short-termism. So across Africa, again, I speak as a board member at CFA Institute. I know the CFA Institute and CFA societies are building local talent, shaping policy conversation, and we're trying to strengthen governance frameworks, mainly to attract the required capital. So simply put, there is no sustainable capital mobilization without trust, and there is no trust without standards. And that's where CFA Institute comes in. Every single dollar, whether domestic savings, pension capital, international investment, would only flow into well-governed, well-structured, and well-managed markets. Very important for us to remember that. So as we speak about unlocking African capital today, the CFA Institute reminds us that building capacity is as important as building capital. Now let me switch my hats back to AfC. So I'm switching between two roles here. So AfC, I'm privileged to serve there. And of course, our job really is to turn capital into bankable projects that have real developmental impact. We've done this significantly in various areas such as energy, transportation, logistics, natural resources, industrialization. We mobilize capital from African institutions, global institutions, development partners, and we blend this capital with our own balance sheet, our own risk appetite, and our own project development expertise. To date, we have invested over $16 billion across 36 African countries. We've been parties to helping governments to raise capital from all over the world, from the Samurai bond market, the Panda bond market, and we're just generally helping Africa to expand its access to global capital pool. So our mission aligns perfectly with today's theme, Africa investing in Africa to build the Africa that we want. If we want to bridge Africa's infrastructure and investment gap, capital mobilization must be a continental priority. We need all the African pension funds. We need the insurance companies, the sovereign wealth funds, the banks, the retail investors to increase their participation in African assets. And I dare say we need all of you to increase your participation in African assets. I was at a conference at the B20 a few weeks ago in South Africa, and I was on a panel like this, and one of the panelists raised the question to the room and asked that, how many of you save your money in Africa? You know, a lot of Africans, unfortunately, again, I'm just being truthful here, once you get to a certain threshold, all you're thinking about is, how do I move my money to Dubai? Or how do I move my money to the US? And you get to a certain level, I don't know if they're in this room, your target market becomes Switzerland and other areas. That cannot be the sustainable model. If you're not investing here, what signal are you sending to the rest of the world about investing in Africa? So we need to think about that as we continue our conversation today. So capital is not enough. We need technical expertise, we need transparent institutions, we need partnerships, and above all, we need African talents that are on challenges and African opportunity. And that's what I see in the room here. And this is where CFA Institute and I believe AfC together form a powerful equation. CFA Institute builds the people. AfC builds together, we're going to build the continent. Francis was talking about Nairobi, so maybe I would just be very gracious to you to say we're very proud to be hosted in Kenya and Nairobi, and certainly this is a country and a city that exemplifies resilience, innovation, fintech leadership, and a long-standing commitment to financial sector development. So we're very happy to be in a perfect location for this type of conversation. Again, in my personal life in AfC, we're also in the process of opening our first regional office in Nairobi. So it's a perfect time for me to be standing here in Nairobi. So as we begin today's conversation, I invite all of you to approach this conference with a spirit of collaboration, ambition, and ownership. We need to ask important questions. And like Francis said, we don't want to meet in 2 years and nothing has moved, right? We've talked and talked and talked. It's time for us to act and do something meaningful to move our continent forward. I argue that Africa does not lack capital. I argue that Africa does not lack ideas. What we need is an alignment and the courage to execute. So in closing, I just want to say a big thank you to the CIA organizers. Francis, well done to you. I was a former society president myself. I was CFA Society Nigeria president for 4 years. And earlier outside, I was being asked that what's the difference between being a society president and being a board member at CFA Institute. And I was like, oh, my job is easier now when I was the president, I would have been like Francis, running all over the place to ensure that everything is going well. So well done to Francis, well done to the team, well done to the CFA societies across Africa. It's so nice to be among you guys and to see you all today. You know, it really brings back memories of when I was on the other side running most of these conferences. So your presence here signals that we're all ready for a new chapter in Africa, one where Africa takes greater responsibility for financing its own development, and where institutions like the CFA and AfIC will continue to guide, to innovate, and to lead. So I personally look forward to the conversations, the insights, and the partnerships that will emerge over the next day and a half. So once again, everyone, ladies and gentlemen, welcome to Nairobi, and thank you for committing your expertise, your influence, and more importantly, your capital to Africa's future. So thank you so much. Thank you.
Thank you so much, and thank you for the challenges that you've put across, and the fact that you really set the tone for a lot of the conversations that will be happening here in the course of today. And the fact that we need really to accept that the greater responsibility for investment on this continent really lies with Africa. And I'm really keen to hear a lot more about the internal resource mobilization strategies that will be coming up in the conversations that will be leading to this. On your table, there is a card that has a couple of QR codes, okay? There's one for my glue up, so that just allows you to be able to access the program, the agenda, to know who's speaking, and also just to contribute to the conversations that will be happening here. The second one that asks you to download your selfie is not a trick. I know we are LinkedIn people, and I think we should be doing a competition of who's LinkedIn, because some of your LinkedIn profiles are really grand, and we'd like to give you an opportunity to even post more, right? So there'll be lots of photos taken during conversations, during presentations, and in your networking. We'd like you to have those pictures today, not wait for 14 working days, okay? Here's what you'll do. If you'd like to access the photos that are being taken by the team, just scan on that code. It will lead you to a link that you should be able to access your picture. How do you access your picture? By putting up your selfie. It recognizes that, so you don't have to scroll through 30,000 photos, right? Technology, right there, okay? So I'll give you half a second to scan, okay? And so the first one is to allow you to get access to the program, to the events, to know what's happening, the conversations, the speakers, and that is my glue up. You can access it on Play Store and on the other one as well. The other one is that leads you to the photos. Are we good up to there? Excellent, great. So ladies and gentlemen, I really am excited that there's a lot of conversation that is moving from what the challenges have been spelled out, and like Francis mentioned, the challenges are very clear for everyone. I think where we are heading to is, so what do we do now? What is my responsibility? A lot of you represent different organizations that are really key in driving and in part of Africa's growth story. And our hope is that at the end of tomorrow, you'll have a very clear picture of exactly what role you get to play. But I'm also excited that we have the backing and the support of the Kenyan government being involved in this conversation, because truly nobody can do this alone. It's not a private sector conversation. It's not a government conversation. It's a conversation that brings everyone together. And that really gives me great joy to introduce our keynote speaker, who will be talking to us a little bit about the markets, but with a keen interest on integration and sustainability. Ladies and gentlemen, it is my pleasure to introduce to you the Principal Secretary for the State Department for Investment Promotion in the Ministry of Investment, Trade and Industry for the Republic of Kenya, Mr. Abubakar Hassan Abubakar, to speak to us. Karibu sana. So he's taken the long route, so we need to clap until he gets here. Thank you so much.
Thank you. Let me, before I start, when I was asked to come for this conference, I usually, when I cleared school, I used to tell colleagues that I'm a CFA. I'm a CFA graduate. And then when people were looking at my papers, they found that the which I was called CFA East Africa. That was back then in 2006 or 2007. I just cleared campus. That was not the real CFA. Then it changed its name from CFA to now it's called ISIFA. Are you aware of that organization? It's called Certified Investment and Financial Analyst. That's the Kenyan base. So when I was a member of Certified Investment and Financial Analyst of Kenya, not a certified financial analyst. But you'll bear with me if I'm a quack in that area. Chair of CFA Institute, Board of Governors, Marshall Bailey, Banji Fehintola, who is also a board member of AfIC and CFA Institute, leaders of CFA societies from Kenya and all other 15 to 20 nations here, fellow professionals, ladies and gentlemen, good morning. Before I start this, I read this statement, let me just say that I subscribe to the argument made by Banji that Africa does not lack a capital. It is true, there is a lot of money out there. What it's lacking is investor-ready opportunity, investment-grade opportunities, and bankable opportunities for this capital to flow. And as government of Kenya, we are committed to enable that through incentivizing and de-risking these opportunities to make them bankable and the continental capital and the global capital to flow. It is my great honor to address you at this Africa Investment Conference, a gathering that brings, I'm told, together over 500 professionals from more than 20 nations. I want to commend the CFA Society, East Africa, and CFA Institute, and the CFA community across our continent for convening this timely and solution-driven Pan-African dialogue. Who are coming out of, not from Kenya, I just want to welcome you to Kenya, the largest economy in East and Central Africa, but also the home of human origin. The scientists have now scientifically proved that Kenya, it is where humanity began. So you are all Kenyans, and that is why the president had removed visas for anyone who wants to come to Kenya. I'm sure you did not get a visa to come here because you are coming home, so welcome home. And also, you want to clap for coming home? We'll do more of home party after this. And also welcome you to Nairobi, the environmental capital of the world. We host the UN headquarters on environmental matters here in Nairobi, and also the only city in the world with a national park. I'm told after this you get to have fun, so make sure you go to our national park, and we have lions who are caged. So be careful about that. For decades, global narratives have described Africa as the continent of potential. Today, we stand at a turning point as we move decisively from potential to execution and from ambition to action. It is true that we always, as a country or as Africa maybe, we sell potential to investors. We do not sell an actual, as I have stated earlier, a bankable opportunity or an investment grade opportunity or an investor ready opportunity for the investor to come structure it investment grade. So we have made a decision ourselves to move from selling potentials to actual investor ready and investment grade opportunity to be able to accelerate the conversion, the leads that we are getting through our investment promotion agenda into actual investment deal. Africa is the last investment frontier. And if anyone in the world have a plan for Africa, then you do not have a plan for the future because of its demographic dividend and also because of its natural resources. And anyone in the world who is looking for two major things, supply chain diversification and net zero targets, Africa is where to be. And Kenya in particular, it's where to be. That is why we are positioning Kenya as an entry hub and a gateway to the rest of Africa. Our diplomatic focus, or focus of our diplomatic function, has always been trade for economic and commercial diplomacy. We want to broaden and deepen the trade and investment relationships so that we can increase the level of investment and trade in Kenya and the rest of Africa. And we are championing the operationalization, or President Ruto is championing the operationalization of the Africa Continental Free Trade Area so that we can increase the level of trade. And for us to trade, we need to produce. So we'll also increase the level of inter-Africa investment. The theme of this year's conference, Africa Investing in Africa, solutions to the challenges could not be more urgent. We know the challenges are infrastructural gaps, climate resource pressures, and fragmented markets. But you guys as CFA professionals, you know that Investment 101, whenever there is a challenge, there is an investment opportunity. But within these challenges in Africa lies greatest opportunities of which Africa capital must lead. In Kenya, our vision is simple. We have an agenda. We have an economic transformation agenda based on bottom-up economic model. And where we want to go, the goal, as what the president always says, is we want to move Kenya from a third world country to a first world country. And that is not a slogan. It is a proper vision, properly calculated, and we will get there. He's very confident of that, and that is government. We are confident in that. For every country to move from third world to first world, we need an average of 25 years. He has given a margin of error of 1 to 5 years, and he said he's currently 60. By the time he reaches 90, God willing, Kenya will be a first world country. Our economic transformation agenda is based on 5 key pillars, 10 productive value chains, and its cross-cutting enablers. This is where the opportunities lie. And we want to work with you, the CFA professionals, to see how we can structure these opportunities to bankability so that we can attract the necessary capital, which it is not lacking. We're just looking at the data with Francis. the African pension funds itself is almost $700 billion. In Kenya, we are shifting all pension funds. Generally or traditionally, they are invested in financial assets, basically government bonds. We are now shifting that. We want our pension funds, and we are seeing real direction in that area, in that space, from financial assets to real assets that will have the impact in our economy. We are now funding, we're using pension funds to fund infrastructure development, like our highways and stadiums. And we are seeing an opportunity here if the African pension funds can also be redirected from investing in normal financial assets to real assets in Africa, so that we can take our continent to the next level. So funding this economic transformation agenda, it needs investment so that we can achieve our goals and our objective. And you know, in any country, like Kenya and any other country in Africa, public investment is usually stretched and strained. And that is why President Ruto is now pro-private sector, pro-private sector investment-led economic growth. So we are moving away from an aid destination where we are going to beg money for development. We are moving away from a lending destination where we are borrowing money for development. And we don't also want to increase taxes to our citizens. Although I believe we are not optimally taxed, but citizens have said, and they are the owners of the country, that you are excessively taxing us. So we are moving from that to private investment. And how do we do that? So we are focusing on public-private partnership, where we are involving private sector into our investment agenda. We are moving to privatization, to include private sector into our development agenda. And that is why we are now selling Safaricom shares, which is listed in our stock exchange, to further deepen our capital market space. We're intending to list a serious company. Our jewel in our stock exchange is called Kenya Pipeline Corporation, so that we want to democratize that ownership from public to private sector, so that we can get the necessary money to fund our development agenda. But also, we are also moving to direct private investment. And in that space, we commit to enable and facilitate private sector to invest directly through our special economic zones and export processing zones, so that they can be able to produce competitively. Let me tell you something which is currently under discussion. As we attract this private sector, the first priority of any private sector is business environment, or the investment climate and the business environment. So private sector always engage government to have policy and legal interventions that will make the investment climate and business environment competitive, so that they can be able to place their money. And they do it through lobbies. So in Kenya, we have over 100 private sector lobbies. Over 100 private sector lobbies. Multiple sectors, private sector lobbies, fragmented, and lack of a unified voice. To the extent that my State Department's role, the mandate of my State Department, is to continuously engage the private sector to identify challenges to be addressed and opportunities to be unlocked, so that we can improve our business environment and attract the necessary private investment. We engaged the private sector, and we came up with a Finance Act of 2023. Other private sector went to court and made that Finance Act nullified, to the extent of paralyzing government. So there is no effective public, advocacy, because the role of private sector lobbies is that. So what have we done now? And that is what is in the papers you will see. Yesterday, the papers wrote that I'm killing the private sector lobbies. I'm trying to address a challenge here so that the private sector can be effective in their policy advocacy. So we have come up with a bill and established an umbrella body that will represent all these more than 100 private sector lobbies, to have a one unified, strong voice to be able to push government to give them the necessary policy and legal intervention. We have a bill underway with the private sector. They are trying to scrutinize it. We are hoping that they will strengthen it to make it better so that we can solve the solution of effective policy advocacy. I cannot continue this conversation, since I'm the PS for investment promotion, without boasting about our country and what we have achieved so far. So as a country, we have been rated #1 in Africa by FDI Intelligence as the country with the greatest investment momentum. We have also been rated by Africa Investment Report and Africa Big Deals as a startup funding hub. For the last 2 years in a row, we have been able to attract the largest capital for startups in Kenya. And just last week, we have been rated #1 in Africa in terms of business efficiency. All this is a result of the innovative and the visionary leadership of President Ruto, who is pro-private sector and pro-private sector investment-led economic growth, which we want to bank on you. We want to bank on you professionals to help us in how we can structure these opportunities to bankability to attract more private sector. As I end, or as we begin this conference, I invite you to seize this opportunity to forge partnership, to exchange insights and design financial models that will shape Kenyans or Africa's next economic chapter. Kenya stands ready to collaborate as we build a continent where innovation thrives, capital flows, industries scale, and our people prosper. Kenya stands ready as your partner of choice and as the home of the Africans' next frontier of investment. Together, let us define the future of African investment. Together, let us unlock the Africans' full promise, and welcome to Africa Investment Conference 2025, and I declare it officially open. I thank you.
Thank you so much. Another round of applause to PS for graciously hosting this. And as Francis makes his way this side, you know, I mean, if there are no pictures, there's no evidence that it happened, right? So I'd like us to go into just a brief photo session. I'd like to invite, Francis is here already. If, Oyebanji, if you could join me up on stage, as well as Marshall Bailey for this picture. We could, is that the best position? You want that? Okay, great. Are we good? Excellent. Now we have evidence. Thank you so much. And thank you so much, PS, for the strong support from the Kenyan government. We have a token of appreciation to say asante sana as you go back to the ministry, and the commitment that the CFA will continue working with the ministry. Thank you so much. Excellent. Great. Ladies and gentlemen, how are you feeling so far? We'll keep going? Feeling great? Good. So all the speakers that have come here have really set the scene for what we really hoped would happen today, where we can create an environment that we can candidly talk about some of the opportunities and challenges that we do face, and hopefully we can figure out how to go from here. It was great to hear the PS talk about some of the great strides that have been achieved by the Kenyan government and their focus on private sector-led investment landscape. So at this point, we'll dwell a little bit more on that, and we'll be spending our time to just look at the capital formation in Africa, where we'll be looking at Africa-driven research and policy views. And this is a conversation that we'll have a scene setter by Olivier Finesse, who is a CFA head of advocacy and policy research, but also he will be joined by a panel that will be discussing this in detail. And like we did say, we want to really get into the crux of the matters. So ladies and gentlemen, without much ado, allow me to bring up Olivier to take over this. After his presentation, Olivier will invite his panel. Karibu.
I think you can actually join me already. Can we get the presentation on the screen? Good morning, everyone. My name is Olivier Fines. I lead advocacy and policy research at CFA Institute, based in London. It is an absolute pleasure to be here with you all today, and I would like to thank you all very much for participating in this great event that we are all looking forward to continue to grow into our major hub and periodic hub for discussing the advancement of capital markets in Africa. Today's session will be dedicated to our most recent piece of research that we have very recently released, called Capital Formation in Africa, A Case for Private Markets. I am joined today by esteemed panelists. I thought there were 6 of you. Where's Sabelo? We need more chairs. I will introduce my fellow panelists in a second. And there you go. Our aim with this piece of work, as was just mentioned, if I can get the clicker to operate. Was clearly action-driven research and actionable policy recommendations. In other words, as was just mentioned, move from words and intention to actual action. And so the way that we're going to do this session today, I wonder if we can get that clicker to work, is I will run through the story and the background of this research. You'll all get access to copies of the brochure for this research with the main conclusions. We'll get through this agenda, and at times I will turn to my esteemed panelists for commenting on specific topics and concepts raised as part of the presentation. We will go through the genesis of this work, the method we employed, the partners that have participated in this piece of work, the problem that we were looking to address, the barriers to capital formation, and thus the policy views that have resulted from this analysis. I would like to discuss the Africa risk premium, or the so-called Africa risk premium, and then as a group we will discuss what next steps can be. You know, let's stop talking, let's start acting at some point. And so it is my absolute honor to introduce you all to our panelists. Starting from my left, Narendra Visser, President's Council Representative for Middle East and Africa at CFA Institute. Thank you very much. Alan Norman Luetabe, Director of Investments for the Deposit Protection Fund of Uganda. Sarah cannot join us today, but she was an eminent member of the research team, and she works at Waika Reinsurance in Kenya. Sabelo Mbele, Portfolio Manager at Luwani Capital Partners from South Africa. Tendai Namo, Associate Director at EY Parthenon in Zimbabwe. And Fasil Gebretsadik, Principal Advisory Services for business and investment in Ethiopia. Everyone on that stage has participated one way or another in this research. I wanted to show you as well how a collective effort and a multi-country regional effort this piece of research has been, which resonates very well with what we've heard so far as part of the opening speeches. So, before we turn to the panel, I wanted to also explain that this is not our first foray into the region. Back in 2019, we released our first organic piece of research on the challenges and opportunities of developing capital markets in the region. However, this one, this time, focuses on the actions, the policy developments, the recommendations that we would like to take to people who will listen and act upon them. This work has originated in a panel, a council that we created back in 2021. We called the African Advocacy Council. It's composed of specialists from the 5 societies that have been mentioned so far, composing our network in the region. We wanted to determine the common strategic policy priorities in the region. We wanted to maximize the Institute's impact in the region by leveraging this network of societies and experts we have, which was truly created as a top-down meets bottom-up approach. This was mentioned also earlier in the session. At that stage, I would like to ask Naridna, what do you make of all of that, Naridna? How do you operate this network? Because that is kind of your job, right? To coordinate the actions of those wonderful people. Is that me? No? No? That was not me. Okay. It is a big question. Naridna's role is to coordinate the action and maximize their impact. How does that work, Naridna?
Thank you very much, Olivier, and thank you for the opportunity. Africa is a continent. It's not a country. We have, you can see, a relatively limited number of societies representing CFA Institute in Africa. How does that work? Because we're talking about 58 countries, we're talking about major regions, we're talking about regulators, financial markets, stock exchanges, pension fund systems across the continent. And it certainly is a challenge to cover the continent from that perspective. But as we so often do in Africa, it is through collaboration on a regional basis that we start out. So we start out with countries that feed into a regional basis, broadly southern, eastern, western, central. We've got Mauritius on the island states as well. So certainly what we have in terms of our structure is that we capitalize on the regional structure that we have in Africa. I think East Africa is a wonderful example of the success that have been achieved through regional cooperation in East Africa capital markets. Similarly, when you look to Francophone West Africa, so many of the really successful policy initiatives came about because of regional collaboration. Similarly, in the SADC region, down in South Africa and Southern Africa as well, the same model. So we are using that same basic structure in CFA Institute and with our CFA member societies. As it stands, we represent just over 10,000 different members and candidates across Africa, so a vast number. And what our members and the societies really are able to do is to bring this global best practice of the highest standards, not just in ethical conduct, but also in professional excellence. But it brings it to the localized relevance in terms of what does that mean? How do you ensure that you have policy development that is fit for purpose for Africa? Talks very much to the topic of this conference also, is that we need to find these solutions that actually has relevance in Africa and is applicable within Africa. And that's why the series of research that have been conducted by CFA Institute could never have been done from a top-down approach. It needed very strong partnerships on the ground. And so the CFA societies across Africa, our members in particular, have been key key to provide that vital local link between the local regulators, but also understanding the challenges and the opportunities. And for me, this really is that perfect partnership. You know, in Africa, we say, if you want to go fast, you go alone. That doesn't work for us. We want to go far, so we go together.
Thank you very much, Nirina. That resonates perfectly with what it is we're trying to accomplish here. And so next, I would like to discuss the genesis of this work. If we can put back the slides onto the board. I will turn to my friend Alan in a second, but I'll take you through a little bit of the background before. So you can see here, back in 2021 and 2022, when we asked the members of the African Advocacy Council what it is you think resonates across the region, what are the main problems we are trying to solve, this is what they came up with. And it sounds gloomy, but the actual idea is to turn this into policy action, change, and results, as was just explained by Principal Secretary a minute ago. Capital does not stay in Africa. Middle class struggles to invest. Capital raising requires the use of external financial centers. These have all been mentioned as regionally relevant. This Africa risk premium, I'm still at odds with the concept of an Africa risk premium. I would like to know what you think about this concept. SMEs, we heard from our meetings this very week that 90% of job creation in the country here is done through SMEs. If you don't get capital to SMEs, you got kind of a problem here. Policies and regulations disharmonized across the region. That is definitely something we can work on. And finally, Africa could use new methods for raising capital better for the new economic system, tech-driven economic system. Perhaps there's something better we can do here. Look at private markets and how they can be articulated with public markets. So I'll go through our simplified but overarching logic here, threefold. First of all, when you consider simply the population situation, this is UN figures. By 2100, they expect Africa to basically represent north of 25%, a quarter of the world's population. All right? Nothing new there. The next problem with that is when you compare that to its share of world GDP, or in this case, GDP per capita, there's a clear disconnect. In other words, Africa's GDP is too small. We need to bring it back to a commensurate level that is aligned with its share of the population, at least on a path to getting there. And so finally, three, our hypothesis, what we are actually positing is that access to efficient finance is the key to unlocking this potential. You heard the term potential earlier. Let's turn that potential into actual results. And so this is a chart that I found interesting that we've inserted in the research. It actually shows the relationship between access to finance, access to credit, loans, capital, against GDP per capita. You see a positive relationship. Now, when you compare where African countries are, they are still stuck in this bottom left quadrant. Note the interesting situation of Mauritius that has managed to develop. We need to move those African countries towards that upper right quadrant. That is the purpose of this research, and that is the purpose of why you're all here today. So what was our thesis with this piece of work? Identify barriers that are relevant across the region, focused on those big problems, connect capital market development to its higher purpose of socio-economic progress. There is no sense or logic where we develop capital markets without that having an impact on socio-economic progress. This was mentioned earlier many times, and it's the truth. We also wanted to deliver a strong message and policy recommendations, again, to people that will listen and enact those situations and changes at a regional level. And finally, can we create the local network, going back to Nirina's point earlier, to deploy that strategy? The man at the origin, at the genesis of this work, is my good friend Alan. What do you make of all of this with the benefit of hindsight? Do you think this was the right approach? How the hell did we decide to do this, basically?
Good morning. everybody, and welcome. It's, for me, looking now at the room as it's set today, I think about 2021. The best thing for me to come out of COVID is that I had my Isaac Newton moment. I was idle, walking around, stuck in my compound. And one of the things that was sticking out of my head is that there is this problem that was nagging me from 2016 rather. I had been in 2 meetings with a bank out of London. And they had a meeting with the Minister of Finance, and then they had a meeting with the central bank. Now, my role at the time meant that I was in both meetings at the same time, rather on the same day. So I had the context to know what was going on. In one meeting, my government was looking to raise $1 billion from this bank. And what transpired in that conversation is that my government did not qualify. That is a morning meeting, very difficult, banging tables, everybody's unhappy at the end of it. And then in the afternoon, we have another meeting with the same bank where they are proposing that we place $3 billion with the same bank. Same day, same capital city, different questions. The easiest decision that my government could take was to place $3 billion with that bank, but they could not get back $1 billion to buy whatever they wanted to buy. That problem nagged me for 4 years, and in COVID, I started venting to our regional rep in London for the CF Institute, Samia. We used to have some catch-up calls. So one of the issues I was telling her is that I have this problem, I see it. I placed $3 billion with this bank, but I cannot get back $1 billion. And for me, that is a problem that is nagging me at the back of my mind, that this is a problem that is present in all the other central banks I'm looking at. They're all placing $5 billion, $10 billion in London, in Washington, but my Minister of Finance has to get on a plane to go and grovel in Washington to get $500 million. So as we were discussing, for me, it started to form, and in 2021, the aha moment really came for me. My background before I joined portfolio management, I used to write rules. I used to write the plumbing for the financial sector. My job was to figure out what is the correct regulatory environment that will create mobile money. What is the right regulatory environment that will create fintech? That was my role. Now with this new problem, I figured it was a plumbing question. How do you create the plumbing that's going to allow the central bank in Zambia to appreciate an opportunity in Somalia? How do you create the plumbing that allow an investor or a sovereign wealth manager in Senegal to appreciate an opportunity in Mozambique? But before we reached that level of plumbing, I knew from my history writing rules that you need a basis. You cannot enter a room and say, Africa is rich, and so from tomorrow, we are all moving our money to AfIC. It's not going to happen. There must be some clear frameworks, there must be MOUs, there must be rules, there must be guidances. There are so many things that have to be created. For those things to be created, you need a research piece. But you need an authority that is going to be believed. So when I go to my minister and say, yes, Uganda has a problem, but so does Mauritius, so does Senegal, and here is the evidence from a recognized party, and I think it's necessary for us to sit together to have this discussion. So it is in these conversations in 2021 that the early ideas start to form. Who do we need to have on the table? The name Olivier really came out strongly. Olivier is going to really get this for you. Much later, we started formulating the Africa Advisory Council, the first 5 people to really brainstorm. Do you have the same problem in Zambia? Do you have the same problem in Nigeria? Do you have the same problem in Kenya? So we started now forming a group of, yeah, we have the same problem. We have the same experiences. And so gradually the structure starts to take shape. But for me, leveraging my experience as a bank supervisor writing rules, a portfolio manager in global markets, I knew it wasn't going to be very easy. I knew the biggest job was you need a way to collect to highlight everybody's problems, put them in one document, and then showcase to people that this is the nature of the problem, and then the ideas can start to form in how to solve it. I'm very happy that after 4 years, we actually have the piece. We have the information that shows what is the nature of the problem in Senegal, what is the nature of the problem in Mali, what is the nature of the problem in Zimbabwe. And you can see, if you read the piece, they are common but not the same. Some countries have solved some issues, some countries haven't, and so you can see where the solution could be, or you can see who has a similar problem and how you can connect. I used this piece in conversations earlier this year with my Minister of Finance, and there's been a significant shift in the conversation. Because right now, I'm not speaking as me flagging a problem with the government. I'm just sharing that my government's problems are every other African government's problems. So it's not unique. I'm not castigating you for failure to execute. I'm just highlighting that perhaps now is an opportunity for us to deepen and think broadly on how we can solve. So when I look at where we have evolved in terms of our capital formation, discovery, and highlighting the challenges, my problems from 2021, I feel that now I get a sense that they can be solved. Because now I have the research, I have the basis to speak to my Minister of Finance, to speak to my president. I've spoken to the central bank governor, and everybody now is gravitating towards now highlighting solutions. And so for me, from a country point of view, I'm very happy with in hindsight, with where we started. I'm also happy with how far we have gone in building a group of intelligent, exposed, experienced persons, contributing their thoughts, sharing their country experiences, and giving us solutions. So I don't have to come up with an idea of how I'm going to solve issues in Uganda. I can just piggyback on a solution already in Nigeria and say we can domesticate. I can pick on a solution in Zambia and say, this is how we can solve real estate. This is how we can solve private markets. This is how I can reduce the cost of financing of my government. So one of the decisions I took in 2019 is I led the effort to give money to AfIC Bank against the advice of the IMF. And it was a really tough battle, but I was like, I know I'm correct, that if I gave AfIC Bank funds, they will be able to demonstrate to other central banks that this is a proper way of intermediating capital, because AfIC Bank, the largest client they had, are African governments doing infrastructure and other developments. Today, AfIC Bank has over $10 billion from central banks. But I'm happy to say I was the first to give them and lead that conversation, because I strongly believe that capital formation in Africa starts with us taking the most difficult conversations, leading them, and driving that capital to where we want it to be. So I hope for most people in this room, you join me in this journey, join me to be champions. You can lead from wherever you are. You can cause your institutions to recognize that Africa is where the value is. China is not here by mistake. The French have been here for a minute. The British have been here for a while. The Americans are still interested. Why is Africa not interested in Africa? There's something we are missing, and I think we can solve it with this paper.
Thank you. Thank you very much, Alan. Thank you also for reminding everyone how long it took us to put this to completion. Thank you very much. We will carry on this discussion. I would also like to remind the crowd that we will end this session with a Q&A with the audience. I would encourage you to raise your hand and ask questions, because as you can see, there's great people with a lot of insight in here. Let's carry on, because this work we thought would not have been so powerful and insightful and impactful without us having access to important regional institutions and support. And so we were honored that 2 forwards have been proposed by 2 institutions and important people that gave resonance and magnitude to our work. Dr. Phumzile Mlambo Nguka, former Deputy President in the Republic of South Africa, and Mr. Ahmed Rashad Atut, who is the lead director for financial sector development at the African Development Bank. In fact, we'll discuss later on how we've used our relationship with the AFDB to give this work even more prominence. What I would like to spend just a few minutes on is that you could take a look at those 2 forwards in the piece. They're really interesting because they mention a number of concepts that we are developing and elaborating on in the rest of the piece. Dr. Mlambo Nguka established a dichotomy between the potential and a very dynamic population against this concept that capital markets are still fledgling, nascent, low liquidity, high risk premiums. How do we close that gap? In turn, Mr. Atut explained how capital market development is by definition at the core of the institution's priority. Strengthen capital market and create an enabling environment, broaden market participants, deepen the quality of instruments, ensure effective knowledge management. We will discuss that again later in the presentation. And regional integration. This is an obsession that we are now discussing. How do you integrate in order to maximize the combined impact? So I just wanted to spend a few seconds on this. We had a dedicated webpage for this piece, which also explains how we've partnered with the AFDB, who joined. They honored our own round table in Abidjan as part of the annual meetings. It was interesting because the main theme of the AFDB annual meetings back in May was, how can we make African capital markets work better for Africa's economy, which resonates very well with Francis' Africa to invest in Africa. Where's Francis? I can't see him. Anyway, that is the theme. How can we get capital to be created and then magnified, compounded in the region? Next, we will discuss the purpose for this collaborative research effort. What we really want to demonstrate at CF Institute with our societies is our institutional commitment to the economic development of the region. That is an absolute necessity. We want to establish that expert network, which is why you're all here today. We want to identify those barriers that Alan mentioned to capital formation. What could be the resulting key policy recommendations that we take to the important institution, again, at a regional level to make their impact more felt? And examine, finally, this is an important underlying theme in the piece, if private markets, by that I mean private equity, venture capital, which is a theme we've discussed at length as part of the meetings we've had earlier in the week, can play a role in propelling the rise of capital markets in general in the region. In other words, can there be a balance between private and public markets to benefit the overall capital market development? That is an intuition that we would like to further develop. As you can see, we've covered, we think, a good panel representing the region. 11 countries in West Africa, in East Africa, and in the southern part, because we also wanted fair representation and enough representation of various situations, not to forget Mauritius. That doesn't show very clearly on a map, sadly. Maybe you could make Mauritius bigger, you know? It was a very complex project. 33 external authors. I'm glad and very honored to say that several of them are in the room today. Go talk to them. They have a lot of insight, a lot of experience to share, because they are operating in very different types of firms. We have academics, we have industry professionals, we have traders, we have portfolio managers in there. Go talk to them. They brought an enormous amount of data insight that we took together and amalgamated into this piece of research. Now, this is how we operated. What we did is we asked each team to rank a series of barriers that we had identified. We had about 25 of those, and we asked them to rank them from one most significant to least significant. And our role was to then collate those results and present a compendium of the most salient issues. We'll discuss those most salient issues in a second, also when I ask Fasil to comment on those. But the result in the piece is a general table with a heat map of those important barriers in the countries. And then you can identify which of those barriers are felt as the biggest pressure points across the region. In terms of the key points of our research, we came up with these barriers, top 6, but there's way more detail in the report. We mentioned it: structural support for SMEs, constraints in fundraising options, insufficient range of financial products, which is a bit of a pain when you have an emerging middle class that wants to invest in Africa. Inconsistency of policies, limited investor education, and underdeveloped financial infrastructure. These have all been mentioned in different ways as part of the earlier discussion. And then we came up, again, together with policy recommendations. We've discussed those already with officials around the region. Enhanced clarity and predictability of regulation. That sounds like a funny thing to say given the world that we now live in, but it's very important for the industry to be counting on predictable frameworks. Rules on private assets, focus on SMEs, standardized corporate governance rules. This is very important when you have an agency situation to know that your rights, for example, as limited shareholders, will be protected by the law. This was mentioned many times as well by the previous speaker, Principal, the use of public-private partnerships. Maybe there's a way that we can better use those. Coordination between private and public actors. We've noted a lot of defiance sometimes on the part of the private sector when it came to public policy, and government-sponsored educational program. At that stage, I would like to ask my friend Fasil, do these make sense to you? Do you think we were kind of right with the benefit of hindsight and in your own experience? Is this kind of correct? Where we take that next?
Right. Good morning, everyone. First, I'd like to appreciate our team from Ethiopia who's done a tremendous work. Merid, West Africa, and this is over there, who's led our research team, and Nahom also, who's co-authored this piece for Ethiopia. In the process of working through this, we coordinated, spoke with Alan, and coordinated with quite a few of our sub-Saharan African authors. It's interesting that there's a way to always look at Africa and think it's just one continent with a similar set of problems. To a certain extent, that is true. But we also have differences in how each of us are facing those problems and challenges and what we're actually doing about them. What we walked away is it isn't something that one country can do it alone by itself. It required a lot of coordination. It isn't about like working on the regulations and improving the regulatory environment on its own. We needed to have a regional integration and possibly even continental integration to ensure that we come up with a standardized set of regulatory environments, governance rules, and enabling environment to ensure that capital flows. Because the institution who's the capital, like pension funds, endowments, and sovereign wealth funds, they're not looking at each African country and where to put what money. They're looking at the continent by itself. So if we don't band together to solve our common challenge, we all miss out. And the only way that we can band together to solve our challenge is to make sure that whatever we're working on in terms of like regulatory environment, in terms of enforcement, in terms of standards, that we market to global standards. In that way, it makes it easier. there isn't supposed to be any competition amongst African countries. It's supposed to be like collaboration, because the fund comes to the continent, not to each individual countries. The more we collaborate and work on our challenge, the more we're positioning Africa to the future. Some of the interesting aspects that I'm looking at right now, I'm deeply involved in, the capital market ecosystem development in Ethiopia is we're getting a lot of feedback and inputs from Nigeria and from Kenya. We tend to bring in consultants to help us craft those rules and regulations. I think we also need to stop and think, is this how it's working in your country? And are we benchmarking to the global standards? Are we all marching together in that direction to ensure that we're able to solve those problems? And that is a key takeaway. The differences that I found was we talk about like the lack of human capital in blanket terms. And Shunju's there and have had a conversation with Mauritius. Their challenge was not even developing the human capital. Their challenge is the human capital has been poached by developed nations, Western nations like Luxembourg, because of the Francophone and some of the best and the brightest, the talents always been taken away by a competition in Europe. Whereas the rest of us, like in Africa, like in Ethiopia, where I come from, that we have to develop a large number of professionals, because capital flows where there's expertise, there's talent. That is the soft institution that goes alongside with the hard institution that we build with the government to enable us to attract that investment. It's been very much an eye-opening exercise. The key takeaways are, how are we positioning ourselves to create that centers of excellence? How do we position ourselves to create each of our capitals as an international financial center so that funds can move in and be able to be deployed, and not necessarily in one country, but across the countries. What I also found was the challenge that we're having in the capital formation in the private market is similar to the challenge that we had with African stock exchanges. I've had a chance to review that report a while back, and I've had a chance to review it again, that there's always this interdependencies between the public and private markets, and the progress and the fantastic outcomes of one market depends on the other. When we look at Africa, we're not looking at like just private or public, but we have to look at both and then see that our regulations are tuned and our enabling environments all being synced to enable us to get there. Thank you, Olivier.
Thank you, Fasil. And you mentioned human capital. That will be discussed later on in the discussion, so I'm glad you brought it up. Let's continue with an interesting concept that I've mentioned earlier. Is there such thing as an Africa risk premium? We keep hearing this. I'm not sure what we are exactly talking about, but these institutions are referring to there being an Africa risk premium. EFDB in international finance, they refer to that myth. How mystical is it? And I would like to ask Sabelo what you think about that. Are we making that up, basically? Or is it having an impact that we need to address?
So my colleague is laughing at the question, and I think in part it might be because it betrays, the message that we got from Francis and the theme of the conference in terms of us doing things for ourselves, right? But if you look at the numbers as well, I think there's something to learn from them. So firstly, Africa accounts for 19% of the global population. We account for about 5% of economic activity on a purchasing power parity basis. And yet, we only attract less than 1% of private equity flows and less than 0.5% of venture capital flows. On the sovereign side, we know that many African governments are now active in the euro-dollar market and enjoy global support from international investors. However, there are pricing differences that exist there, which cannot be explained by credit ratings, right? So from some of the articles, there are interesting anecdotes. Brazil and South Africa, similar credit ratings, but South Africa prices higher. Bolivia and Kenya, similar credit ratings, but Kenya price is higher than Bolivia. And since then, I mean, this was a few years back when there were similar credit ratings. Bolivia has been downgraded as now it's CCC. Kenya has retained a single B rating, right? So investors even got it wrong, despite pricing Kenya higher. So there are also those real considerations in terms of what we are seeing in the data, and the data does suggest that there is an Africa risk premium. There's also another interesting story in one of the articles which talks about Argentina and Angola. So in 2017, Argentina issued a 100-year bond at about a 7-year spread. Now, at the time that Argentina was issuing that bond, it had already defaulted 9 times on its debt. Angola, in comparison, issued a 30-year bond at a spread of about 9.5%, and Angola had not defaulted on any of its debt since the end of the Civil War in 2002, right? Now, the devil's advocate might say, of course, Argentina should price cheaper than Angola. Firstly, they have Lionel Messi. And then, secondly, Angola is a fairly concentrated economy, single commodity, with very serious currency fluctuations. So there are real reasons as to why Angola might price more expensively compared to Argentina. But I would argue that even those differences are not enough to explain the extent of the spreads, right? So I think that as our governments continue to do the things that our colleagues have talked about, which are the real issues that are facing our economies, but also we need a rebrand of Africa. We need to get to a point where we can reimagine Africa, both in terms of what it is, but also in terms of what it can be. And I think in keeping with the theme of the conference, and now coming back to Francis's challenge in terms of us being angry at ourselves, there's also a role that we play by not placing money on the continent to support our sovereigns and support our own businesses. Okay. Thanks, Olivia.
Thank you, Sabelo, very much. From there, we will move to a concept that we have gradually developed to synthesize most of those remarks. And we are using this concept to build our strategy and how we believe we can turn those potential and those ideas into action. This is the concept that we call capacity building. It was mentioned 1 million times as well as part of the AFDB annual meetings. It was mentioned another 1 million times in those meetings we've had earlier in the week, and I believe that this is where we are now with Africa. How do you have the structure in place, legal framework, regulatory framework that you need? You've got the scaffolding, you've got the base. How do you build the building on top of that? And a lot of that is capacity building, starting with human capital development, which in a second I'll be asking Tendai to develop on, because she's a great champion of human capital development, or she'll tell us she's not, but I think you are. Research, data, knowledge management, that was mentioned also a big number of times. Policy advocacy was mentioned this morning. This is very much how we take problems and we transform them into policy action, and we take those ideas to where they will be heard and acted upon. Local expert network, CFA societies, hence why we have Nerina in the room today. Institutional relationships, because you need institutions, you need the AFCs, the AFDB of this world to make all of that happen. And so I would like to maybe focus with you, Tendai, on this concept of human capital development. Is there such thing as human capital in Africa? Don't take it personally. Banji mentioned natural capital earlier. There's a connection here, natural capital, human capital. What do we do with that? Does it matter?
So looking at Africa, our human capital is actually the greatest asset. Africa is the most youthful continent. Looking at statistics, it is estimated that in 2025, half of sub-Saharan African people would be under the age of 25. looking at 2050, it is estimated that 59% of the global working age would be African. Looking at the youthful population, it is also estimated that by 2050 to double to 846 million, and 1/3 of the world youth will be African. This is really has been a shift from 1 in 11 from 1960. So it really presents a demographic dividend that we need to harness if we are to benefit from that. Looking at the research that the World Bank had done, they looked at the low empowerment of women and girls as one of the major deterrents in terms of human capital development. You know, when women and girls are empowered, it gives like a multiplier effect to your communities. An empowered woman tends to be healthier. They choose when they want to have children. They choose, you know, when to enter the labor workforce and how to invest. So it's also very important. But just taking a leaf, one of the speakers mentioned that building capacity is as much as important as raising capital. Mm-hmm. So for me, it's really a question that I pose to the room to say, do we, as we are in this room, have the necessary skills that help us meet the challenges that we have in Africa? We look at informalization. How many of us, number one, have the skills that is able to deal with the SME sector? Do we actually have the programs in place to tap into this market? One of the speakers also spoke about the infrastructure gap. Do we in this room have the technical skills to be able to say, you know what, this is an infrastructure project. Can I run it from end to end? Before we talk about maybe empowering the youth, empowering, you know, women, but to say of the challenges we have, do we actually have those skills? Looking at even industrialization, I think one of the key low-hanging fruit for me would be to say, you know what, let's try to ensure that the STEM subjects are, you know, included in the education system. But then again, as companies, as institutions, what role can we play to ensure that the youth, the girls have access, they are educated, are digitally skilled? So for me, it's really more of a question around the table to say, in as much as we are trying to look for ways to raise capital, but building capacity is as much as raising capital.
I really do hope some of you have some answers, because she will get angry if you don't come up with some sort of solution here. So as part of the Q&A, do bring up some piece of information on how we address this problem. We will now get to the last section here, and this will be a group discussion. What do we do next? Are we done, basically? Can we just all go home and feel happy about ourselves, or do we think there's more to do? I kind of think it's the latter, right? And I would like to ask my panelists in no particular order, where do you think this collective work should take us next, right? What are the most pressing issues? Should we prioritize? Should capital market integration at the regional level be our central point of focus? Because we've heard also other views that maybe we should focus, first of all, at growing local markets and then worry about integration. Is there an order, a sequence here? Floor is open. Who wants to start? Don't fight too much. Fasil, you were first. Go ahead, please.
Voting the fight from Ireland. I was having a conversation with my colleague from Mauritius yesterday, and you know, Mauritius happens to be one of the countries in Africa that has got the largest number of tax treaties signed with African and other, you know, countries around the globe. And I asked him, how did Mauritius end up being the international financial center where investments have been channeled to the sub-Saharan Africa? And his answer was, it was out of a mistake that a treaty that they signed with India at the time of Indira Gandhi, Prime Minister, that allowed them a benefit of domiciling funds out of India and providing them with a preferential tax treatments. And that snowballed into where Mauritius is right now. I'm not sure we're ever going to get that advantage of someone making a mistake in tax treaties. It's not going to happen. But what can happen is a collaborative effort. I remember one of our colleagues from Uganda, the pension fund, wanting to have an exposure in Kenya and other African countries, was not able to do investments because the taxes, I'm going to be taxed where my investment is been deployed, and I'm going to be taxed when it comes back into my country. And I can't be able to have, there's no tax treaties between those countries. There's no, regional integration in terms of like how to handle taxes. Most importantly, also there's been an example from Botswana, where their pension fund is about like $10 billion, but their equities and listed equities is about like 3.5, about like 4 billion. Botswana is not able to deploy the rest of funds into its own local markets because it overpowers it. Now, most of our pension funds are being invested in treasuries, and many of our countries have been experiencing inflationary, some of them have been through hyperinflationary pressures where pension funds have been consistently losing money by being invested in treasuries. If you look at those investments, those were actually losing value, and an exposure to equity over than that, where a pension fund would be able to realize that. Within Africa, we're not able to create those asset classes. We're not able to deploy it tax efficiently. We're not able to be able to take advantage of deploying our own local, mobilizing our own local capital. So I think where this takes us is, it's about integration, it's about regulation benchmark to global standards, it's about like coming up with unified. I see a situation where we're transitioning from an Africa continental free trade agreement into an Africa continental investment type of agreement and framework where that would allow us to be able to achieve it. We shouldn't be discussing this over and over again on all conferences. We should be able to march into action, and that's my view.
Thanks very much. Would you like to react, anyone, or bring your own points? Who wants to go next? Nirina seems to be. Please.
I'm going to grab the opportunity while I have, because I can see this is going to end up being a very contested space. Couldn't agree more with you, Faisal. And I think I'm going to start with the last point that you made in terms of where does current capital in Africa reside? It lies in the bottom drawer of pension funds in the form of government bond certificates. It's dead capital. As investment professionals, I think our focus certainly should be on how do we mobilize that dead capital? How do we actually get the secondary market activity that allows that capital part of it to actually start working in the real economy? I think for the longest time, the very high interest rates in Africa have been both a blessing and a curse. It's been a blessing for investors because they didn't really need to make the capital work. They could just sit back and receive the coupons, and it was good enough. It was a curse for governments and the crowding out of the opportunity for governments to actually spend much needed cash flow on real development in the economy, because it was just paying interest. And a lot of that interest ended up going to places where it also was not deployed for the benefit. To look at developing investment vehicles that can better serve the needs of Africa, for me, is one of the primary, not just opportunities, but that should be a priority for us. And I get really excited when I see a shift, not just within our own community, but broader, when you look at the likes of what's come out of the G20 recently, and specifically the B20 meetings. You look at some of the initiatives that's coming out of how do we share risk and therefore also share opportunities. And the policy work that we're doing is absolutely, for me, that's the basic. It doesn't need, it must always be there, but now we've got to build on that very strong foundation. And when you look at the opportunities that pooled investment vehicles create, where not only do you share resources, You share, and that's capital resources, but it's also technical resources, risk assessment, understanding what this is all about in a common governance structure, sharing risk also, that a single fund does not have to take on the single risk of a single investment product or infrastructure investment that needs to be done. And we're seeing some really good developments in that area, and for me that would be a very important area of focus for us. We are investment professionals, and we should deploy our considerable investment skills in creating investment vehicles that's fit for purpose. And from that perspective, I must just pick up on one of the important things that Tendai so rightly pointed out. And this for me is almost, and it's not a pushback to CFA Institute, but it's an acknowledgement to say what we are currently doing in how we're training investment professionals through CFA Institute relies on the techniques that deep, liquid, developed markets know how to do. All of your risk models, all of your assessment, everything, lovely, deep, decades of long, good, standardized history. It doesn't work like that in Africa. And yet, in Africa, we've already solved for these. So this for me is rather to call on African investment professionals to say, let's take our considerable skills and go and teach the rest of the world how to value private equity, how to actually make investment decisions in the absence of long, deep, liquid history, because we've got those. And I do think that we've got the ability to hear that bridging between the public and the private markets. Africa has got all the potential to do it, and we can be the world leaders in terms of taking what we're already doing every day, but raising it to a global level of this is how you should make investment decisions, allocate capital in the context of the reality of not just how we operate, but what our continent and our people need. My final point is going to be about data and knowledge. Yeah. Why does Africa's GDP represent less than 1% of the world? It's not because we don't work and because we're not very active and energetic in what we do. In fact, I think if wealth was measured by input in terms of work that you do, an African woman would be the richest person on this planet. The way that we measure GDP, product, we don't measure a lot. If economic activity is not paid for in dollars, can we please move away from quoting everything in US dollars as well, guys? If everything gets measured in those sort of terms, you don't get a sense of the value that is created in Africa. So for me, that's another wonderful area of focus, that we need to identify ways to better measure and capture economic activity, economic value add, and then you will find that Africa will automatically be elevated to the level where it is already operating, but it will be acknowledged as such.
Thank you much. Narina, makes a lot of sense to me. Does it make sense to you? Who'd like to go next? I thought you had something to say. Alan.
I can chip in. I think for me, collectively, it starts again with the human capital side, and I'll share some anecdotes from my experiences. 10 years ago when we started out, there was about 3 charter holders in Uganda. Rwanda, I think we were just starting out some trainings with the central bank. Burundi, there's 0. DRC, most of them were based out of Paris. So one of the things for me as a member of the board of the CFA Society and the lead on advocacy, one of the things that was really at the back of my mind, and I came up with a measure, was what is the charter holder per capita? And is there a threshold, a minimum threshold for a functional capital market? And what is the level of talent you must have in the jurisdiction to start to make sense? Using Uganda as an example, I think I've arrived at a threshold. I see 60 to 75 charter holders start to make sense, because then they will be well positioned in different places to start to speak and manage funds. When I was invited by one of my good friends in Kigali, in Rwanda, to discuss their strategy for building human capital, I used the same analogy and said, I think we need to think about a charter holder per capita. You are 10 million people in the country, perhaps you need to focus between 30 to 60 charter holders at start. If you are reaching that level of threshold, there is a level of development you'll be able to start to see, because now there will be different charter holders positioned within the central bank, pension funds, infrastructure, in agriculture, and you start to see the conversation shaping. The next exercise for me is what is the optimal, what is the reasonable level of charter holders for a country, 40 million, 70 million, are we 300 now? What is the right level of charter holders? Because that starts to focus our minds. If we have a very clear target and metric of how many charter holders we need, we start to now to purpose the efforts we're going to do to build that out. I think that is important in communicating this piece. But the other aspects for me are also political. I spoke to a colleague of mine who works in the AU office, the Africa Union office responsible for harnessing, actually for putting together such a conference. And he was not even aware that we had this piece that we had written about what are the challenges in Africa, and he's responsible from a political point of view. I think our next task would be, how do we now engage at a political level? Beyond speaking as technical people, are we speaking to the political class at the Africa level? Because we are not going to get the Africa integration we are speaking about. We're not going to unlock the policy underpinnings that we need unless the AU is on board, unless they have understood that we are capable to execute, but the issues are Pan-African, and perhaps the presidents need to formulate a new arrangement that speaks to that. So I see we still have a lot of work to do on the human capital side. We may run ahead of ourselves. We may write very beautiful strategies and policies, but there's no one to implement. And so these things have to work in tandem. Let's also keep building our charter holders. Let's educate, develop. Let's start working on unpacking the policy gaps, closing those, working with the Africa level policy leaders, such that then we are all in this together. I believe as we do those, we'll be able then to start seeing the change that we catalyze it. But at a personal, at a country level, one of the thoughts that we are working with is perhaps having or formulating an Africa-focused sovereign wealth fund, instead of an allocation, because the challenge we have is that Africa sometimes is positioned in an allocation, in competition with Europe, North America, and Asia Pacific. Perhaps we should eliminate that competition altogether. Perhaps create a portfolio, a fund that is Africa-focused purely. Its mandate, its seeding, its objectives are purely Africa-oriented, such that then the deployment, the focus changes completely. It's a conversation we've had with the Bank of Botswana about 2 weeks ago. It's a conversation I'm bringing to Uganda as well. We cannot tap Africa opportunities if we are comparing Uganda to America. It's not going to work. We have to look at Uganda's merits, its fundamentals specifically. We have to apply our own skill sets. We have to be able to do our own due diligence to identify the opportunities. But that matters that you have earmarked a portfolio, a fund that's purely focused on that. If we do that across Africa, then the level of funding starts to change, then the level of focus starts to change, and then a lot of the vision we are positioned here starts to come to life.
Thank you very much, Alan. I think you've just earned yourself a position as our emissary to the African Union. So expect a letter to come in your mailbox soon.
That's what I was going for.
Tendai, Sabelo?
Alan has already spoken much about it, but just from a country level, I would think that this research piece that we've done, it is more from a policy perspective. Let's then engage, because looking at the different 11 countries, our differences, our challenges are not the same. Some of them are very political, some of them are structural. But now let's make use or advantage of what works in another economy, and then for us to then push to ensure that, you know what we need is there. We can talk about, integration, but the legal system may not actually allow you to do that. It may put a cap in terms of how much you can invest in the next country. So it's more from a policy perspective where I'm sitting to say, let's then try to engage so that we have the end goal in mind, to know what we want to achieve and then push.
I hope someone's taking notes, because I will forget these important comments, and we need to work on our next piece. Last word for you, Sabelo.
All right. No, thanks, Olivier. I suppose, being the last one to speak, all the good points have been taken, but, I'd like to pick up on just some of the things that the guys mentioned, particularly in terms of Africans doing it themselves. So, the idea of an African fund, I think, is a really good one, in that because so much of Africa's capital is either lazy, sitting on government balance sheets, or is outside of the continent, it sends the wrong message. And maybe that's a good place to start, is to try or move towards changing that view. If we can get to a place where a lot of these governments that are experiencing these high spreads, despite their credit ratings, are getting funded by other African countries, then we can start having a different conversation about what the perceptions are and what we believe should be done. So I would say that's one area that should be a focus area. And then secondly, it's the role of private markets. So public markets on the continent are quite nascent, and that gap between public and private is often very thin, given the illiquidity on the public markets. I think that we need to move away from the traditional ways of thinking about investments, listed on an exchange, tradable, and so forth. You can actually invest in projects and companies within the economy and generate a return by just having an ecosystem amongst Africans who have appetite for these assets and are willing to direct capital to the areas where it's mostly needed. And then lastly, perhaps, for those of us who've been in the industry over decades, maybe exposing my age a little bit, but we've talked about a lot of these problems over time. I think maybe just in terms of the first question, we are all role players within the industry. And I think we should come together to actually think about solutions and how we address some of these challenges in actionable ways, so that we don't come back to these conferences and the message is the same around the issues that we are facing. Thanks, Olivia.
Thank you all very much. Thank you to my panelists. That was a very interesting conversation from my perspective. Just a few words from me before we close, and maybe we have a few minutes for questions. I would like to thank my team for this, my dear Phoebe, without whom this will never have been possible. I would like to thank as well Kasha and Kingston on the institutional relations side, because the reason why you're here, all these institutions are here, is because of the work they do. I would like to thank also my colleague Raya Zabolawi, who's doing an incredible job along with Nirina on keeping all those societies kind of under control and maximizing their impact in order for magnifying how they can showcase their expertise. I'd like to thank as well CFA Society East Africa, of course, Francis, Ruth, John, Grace, and Priscilla, because they've done an extraordinary work to put this all together. So thank you all very much. And on that note, maybe we have time for a few questions from the audience. Do we have time? Is there? We don't have time. All right, that was clear enough. We will have time as part of lunch and later on. Please get in touch. There's a ton of insight in here. Thank you all very much for your attention.
Excellent. Thank you so much, Olivier, and your panel for such a detailed look at the whole question of capital formation. And thank you so much for sharing your experiences so candidly, and we really do appreciate. And that's really what this conversation was meant for. So really appreciative of this session. Excellent. Ladies and gentlemen, just to mention that obviously this gathering couldn't have been possible without the support and collaboration of our sponsors. And so I'd like to mention real quick the African Finance Cooperator, TDB Group, NSSF, Sanlavi, Mwango Capital, Capital Survey, East Africa Venture Capital Association, Tour Labs, Tasks, and the African Allocator for being part of making this a success. We totally do appreciate this. Okay. Oh, there are goodies to be taken home, so yeah. Yeah. All right. Excellent. So as we give the tokens of appreciation to our speakers, just a quick reminder that those links that I did share on the QR codes on your table do actually work. There is lots of opportunities to interact even with the session as it's ongoing, but also on the picture front, I've already downloaded 3 pictures, true story. So you can go ahead and download and get to interact as the proceeding go ahead. So the app is called My Glue App. It gives you a guide into where we are, what the agenda looks like, and what we're covering. Excellent. Final round of applause to this panel as they take their seats. Really do appreciate. So ladies and gentlemen, we are running slightly behind time, so I have a few suggestions to make. One is that if we could go for a health break. We've got coffee and snacks right on the foyer, on the right. If we could just take 15 minutes of this, because we have 2 fantastic sessions that I would want to have maximum time. We have a panel that is coming up that will be picking up the conversation of mobilizing intra-Africa capital. But also another exciting session is that we have a fireside conversation that will be happening. We do those 2 things and then we're able to break for lunch. So if I could request us to have a 15-minute tea break. At 15 minutes, please feel free to bring back your coffee and your tea, and then we'll be able to start on the next session so that we get to move. Is that okay? Is that okay? Excellent. So please enjoy your break. I'll see you in 15 minutes.